I think we bottomed out, to your point, on the rhetoric and the fear and the pricing in or the discounting within the market, all the trade data or all the trade what-ifs that were coming down the pike. I think what we're seeing now is if all that's priced in, then is anything that we hear now going to be upside for the market? So we had positive Canadian news yesterday. We still have Mexico that's moving forward. And now we have China, which is the last shoe to drop. Is that going to be enough to keep the market moving higher? I think once you start to see real reality, real facts behind trade, this market's going to hit new highs. We already have seen what it's done just on headlines alone.
Gabriela, what's your take? How much has the market got in terms of upside when we get real kind of trade reprieve?
So I think actually the upside is much more outside of the U.S. market, right? If we think about emerging markets and how incredibly negative sentiment has gotten in that space, I think that's where if you get any sort of incremental positive action on the trade front, specifically with China, that's exactly the asset class that should have the most upside. Because reality is growth is still good in the majority of EM countries, and earnings growth has been very, very strong this year. So as long as sentiment improves, you get multiple expansion, you get EM currency strength, that's where you get the upside.
Rick, what stood out to you today as far as that question on whether growth can continue and how high this market has to run, seeing Treasury yields back off a little bit, approaching, though, that 3% level again?
Yeah, you know, it's not unusual to see buoyant sovereign rates in front of important central bank meetings. Tomorrow, the MPC, the Monetary Policy Committee of the Bank of England, you know, they raised a quarter point last time from 50 to 0.75%. But I don't think anything's going on. But nonetheless, a lot of Brexit stories, extension of Carney by 3/4 of a year to make sure it's over the kind of Brexit hump. With regard to Mario Draghi and the conversations that both our guests have been having, don't see any surprises. Maybe he's going to talk about a slowing economy, which brings up the conversation of divergence. But one thing I would like to add, Gabrielle thought that the emerging markets would settle down. Steve hinted at it, and I agree, when they get trade worked out, and they will get it worked out. But I do caution that there's a good chunk of the volatility in emerging markets that isn't going to disappear if we get perfect trade deals with all our major trading partners, because the central bank balance sheets are getting smaller, the fairy dust is getting thinner in terms of how much it can be thrown out, and those issues standalone will be enough to continue to pressure emerging markets into the future.
Gabriela, in terms of things back here, though, you mentioned the fundamentals are very strong. Does market sentiment match that at the moment, or has market sentiment already started to turn a little bit more concerned, negative?
No, we think in the U.S. market sentiment is actually pretty optimistic, pretty positive. We do think investors have a lot of confidence in the outlook for the U.S. economy, for U.S. earnings this year. It's much more abroad where sentiment has gotten very, very divergent from the actual fundamentals. And I would just debate a little bit here the issue around emerging markets. Actually, what drives flows, what drives performance, it's less about interest rate differentials. Yes, that's a little bit less of a rising tide lifts all boats, but it's actually much more about the growth differential between EM and the U.S. And as that starts to widen, we do still believe that that's an asset class that can do well, even though central banks are normalizing policy here and in other developed markets.
And it's also a zero-sum game. When you talk about rotation, are you better off putting $1, to Gabriela's point, in the U.S. markets or going and trying to get that relative outperformance with EEM? But it does depend on what EEM that you're choosing.
Of course, absolutely.
So Turkey, I can't imagine that Turkey, even though—
You're not going all in, Lira?
Well, I'm not going all in, but unfortunately I bought a little bit too early. I bought it down 40% for my children, and it's still down another $10 from there. So it all depends.
How do you decide what you put in your children's portfolios versus your own?
I put the losses in theirs. They have much more time span to outlive me. So I'm going to give them the losses, and I'll take the profits right now. I'm still long square. The kids didn't get any of it.